Hello, my name is Ivan and I'm trading crypto.
Hey, seriously, is this safe driving to Baghdad?
Yes, very safe. 50-50.
50-50, what, like 50% we live, 50% we die?
Yes.
I've been investing and trading since 2020, and while that might not sound like a lot, trust me, it feels like a century when it comes to market years. During that time, I've learned what to do, what not to do, watched hundreds of educational videos, read dozens of financial books, probably enough to qualify for some sort of financial self-sabotage, but that would be a different story. I've traded stocks, crypto, derivatives, leveraged my soul, flipped NFTs, sniped meme coins, dabbled in DeFi pools. It's probably easier to say what I haven't tried during all those years. The list is just going to be much smaller. On top of that, I've dived into balance sheets, income statements, cash flow reports, earning calls like a corporate detective. And when it comes to crypto, on-chain analysis, miners flow, exchange balances, I've overanalyzed it. And what else? I've spent some time trading on 1 minute chart, drawing dragons with imaginary support and resistance lines, executed some real degen trades, and then gracefully evolved into an investor, which is, by the way, how usually backholders call themselves after failing to cut their losses in time. And now I mostly stick to swing trading because apparently, get this, it's gonna blow your mind, I actually enjoy less stress in my life. Basically, I flipped the full cycle of an average market participant, jumping while there is a bull run and crawling out of the bear market. Bruised, but much wiser. I've seen some, but my sheer stubbornness to stay, learn, and adapt has kept me going. And now I'm here to share my journey and what has been working for me so far. For the longest time, I was chasing the perfect strategy or the magical asset. And you know what's the real key for profitable trading? Is to figuring out what kind of trader or investor you actually are. It's rediscovering yourself. And I'm perfectly aware that it sounds like another stupid self-help seminar, but hear me out. Once I stopped forcing the strategies that didn't fit me and leaned more into my own trading style, things started to make a lot more sense and profit. For example, I realized that passive investing isn't for me. It's too boring. Life is too short. Stocks? Unless we're talking about penny stocks, the price just doesn't move that very quickly. It moves like a snail. Options trading? Not my vibe. Leverage? It's not worth it. Basically, after plenty of trial and error, I found my sweet spot. It's swing trading. It's the only trading style that fits me so far. And here is the best part. Figuring out my trading style didn't just make me a better trader, it made me a better person, calmer, more patient, and far less likely to scream at my screen. But let's get one thing straight. I'm no guru, and this isn't some sort of I've got a Lambo success story. Far from it. If anything, my biggest takeaway throughout all these years is learning what not to do. And since the market never stops evolving, my strategy might stop working tomorrow, and I'll have to adapt and come up with something new. And to be quite frankly, it's just a part of the game. I'm cool with that. Anyway, without further ado, let's get straight to the business and discuss how the strategy works. For the most part, I see myself as a market cycle trader, someone who buys and accumulates during the bear market and sells when everybody yells YOLO or to the moon. Sounds very simple, but when it comes to the action, it's far from it. Buying in a bear market feels like throwing money into the black hole. Fear is everywhere. Everybody feels like the crypto market is going to head to zero. And selling during the bull market, it is just as tough. It just feels like the party is never going to end and you will sell earlier and, you will leave a lot of the profit on the table. But ironically, those are the exact times when the trades should be executed. I remember when people tried to mock my crypto holdings, all of which, by the way, were down. Bitcoin was at about 17K level, surrounded by liquidations, bankruptcies, bottomless feeling in the market. And At that time, I thought we're probably nearing the market reversal because it was just a peak moment of hopelessness. It's just like it was the overall feeling in the air that everything is going to go to zero. The bullish sentiment was completely wiped out. Even some pro traders were calling for Bitcoin to crash to 10K. And buying at those levels was uncomfortable as hell. I remember I kept thinking that what if those people were right? I didn't catch the absolute bottom, but I got close enough. I started accumulating crypto when Bitcoin was at about 20K level. And I owe it all to one simple EMA indicator that just seems to line up really well with a major psychological level for most of the people. There are countless tools and indicators out there, but without a solid understanding on how the market psychology actually works, I don't think they will do you any good. And it's not just about the market knowledge after all. It's about patience, strong conviction, risk management, size positioning, and the right mindset. That's the real key to making it work. Most of the time, traders make money when the market is volatile, whether it's soaring or crashing. But when it goes flat, it's just dull. It's like staring at the charts with nothing better to do other than picking your nose. When the price crosses my trusty EMA, volatility often goes absolutely feral, especially near market tops or bottoms. In the middle, not as much. It's probably as much useful as the weather app in a desert, probably slightly more though. And if you're watching this when I posted this, guess what? We are exactly in that short mid-cycle limbo where Bitcoin might just go down for once more, and if it drops, altcoins will get absolutely obliterated, liquidations are probably gonna stack up like a Jenga tower, and somewhere a leveraged trader will be saying, "Thank you for choosing McDonald's, what can I get for you?" And this is the part where I do the hardest thing in trading. Nothing. I just sit back, sip my coffee, and wait for the market to nosedive into full-blown despair. I might even open a small short position, but generally speaking, I try not to go against the market cycle. After all, pissing against the wind, it just doesn't excite me too much. Only when people start screaming, crypto is dead, for like 100th time, do I even start thinking about touching the buy button again. And even then, my stop losses are very tight because jumping in too early is like high-fiving a bear trap. Very risky. And I'm about to show you why this strategy seems like a solid one right now, whether it's crypto, stocks, commodities, or even those painfully dull bonds or currencies if you're into that type of market. But again, let's come back to the reality. No indicator or strategy works 100% of the time. If it would, I'll be recording this video from my private island or jet or sitting in Lambo, not from my suspiciously squeaky office chair, not in mine chair for that matter. Alright, well, let's take a look at the chart of the Bitcoin, and I've marked here specifically cycle tops and cycle bottoms, respectively. And let's take a look at the previous bear market. So from here, it is difficult to buy from the very bottom, but let's say safely here, once they crossed, you're ready to buy it. You may risk about 15% if it's going to go down, maybe even 20% if you want to go a little riskier, but you end up potentially receiving 700%. Obviously, selling at the top is also very difficult, but let's say you're going to be selling exactly where it crosses up and down, and from here you'll still be sitting on 400% gain pretty much from just within a year, which is not bad at all. And again, I'm looking for BTC, which is the proxy of the whole crypto market. The altcoins are obviously moving much higher, and I'm going to show it a little later. But that's not just it. Let's take a look at the top. You could have sold it here. There was the bear trap, you would be stopped out. But if you would start selling from here, when it showed, you're losing about, let's say, you put a risk management for the position, like again, another 10, 15%, maybe 20. You're gaining almost 70% if you sell at the bottom, which is very difficult to do, but even here, if you would sell it right where the current bull market started, you would still be sitting comfortably on almost 60%. Let's go with this bull market. This bull market is a little bit a wild card because there's a lot of areas where assets are exactly playing around back and forth on this EMA. But let's say you are aware that, the cycle goes usually for 4 years. You would be just, let's say, go from here and it's still 400%. Even if you, let's say, end up selling over here when you are like a little shaky, still 170%, not that bad for a year and a half. And this is in times of complete turmoil. No one knows what's happening in the world. We have a war in Ukraine. Within this time, 150% within a year and a half, it's not that bad at all. That is if you would sell over here. Bull cycle, though, for this current bull market, I don't think it's ended yet. And from here, you're still looking at the 400% currently. Even if it's going to be closing tomorrow on this level, almost 300% very comfortably. Let's take a look at Solana. This is a relatively new asset, so we only were able to capture when it started to go down. From here, going down is almost 90%. It's a case for most of the altcoins though, but Solana in the previous bear market was absolutely obliterated. Like everybody actually thought it's going to go to absolutely to zero. But yeah, you wouldn't be able to sell it at the bottom. But here, even if you would sell it over here, still 85% within a year and a half almost. Not bad at all. From here, when it crosses in the current bull market, it's already, let's round it up. So it's almost 1200%. That is if you would sell on the top. If you would sell at the level where it is right now, 750%. Not bad. Even if you would sell it over here, still 400%. And it is only within 260 days. Roughly speaking, a little more than like 8 months or something. All you need is just patience. Another example, let's go from Bonk. I mean, Bonk is another wild card because no one would ever thought that Bonk is going to go that crazy. But let's say you were lucky enough to buy Bonk at this level. You will be sitting at 120x from the point where it showed to buy. Even if you would sell and be over here when it first time crossed the EMA indicator, still 31x. And let's take a look at the ADA, which is one of the most underperforming assets during this cycle. From the previous bottom to the top, it is 46x. You wouldn't be able to sell at the top. You would sell somewhere over here, maybe even over here, let's say. Still 90% within just 145 days. It's like you wouldn't get this kind of results on the stock market usually. If you would start short selling it from here, it will be 86-89%. Let's say you're a very safe person. You would just be exactly, buying when it crosses up and selling when it crosses down. Here, you would be still selling this at almost 75%. ADA started this cycle a little late compared to Bitcoin. Like Bitcoin joined somewhere over here. Let's say ADA started somewhere from here. You would still be able to sell it for 75% within 183 days. By all means, of course, in the crypto market, it might not look like crazy gains. You can actually increase your capital pretty dramatically if you'll be just selling and buying at this level and selling at this level, which is exactly what I'm planning to do. And I'm aware it's going to take me some time. I'm sure as long as I stick to the strategy, as long as I learn in the way, make sure I cut my losses very quickly, I think I'm going to be doing all right. At least this cycle, it shows exactly that, even though it hasn't finished yet. Let's take a look at the other asset classes. I've chosen a few. For instance, NVIDIA, if you would be buying somewhere from here and selling from here, 500% gain. It's not even the top. The top would be 750. Again, you can even start short selling from here and it would be 50% almost, or 25% if you would be selling at the exact line. And I haven't even checked COVID times, but it would be about 500% as well to the top, or 300% to the EMA indicator. Let's take a look at the SP500. For those who might not know, this is sort of like a proxy of the US economy. From here, if you would be buying and keep holding, it would be 40% within 465 days. It only once touched this line, it still hasn't crossed it. I don't know, looks like just it might go up again, or exactly be like here and start going down. But let's take a look at the currency, American dollar versus Canadian dollar. It's already about 6%. Not much in real terms, but you just have to remember that most of the people trade currencies with leverage, sometimes 50x, 100x. So this 6% change is pretty massive for the currency. Or let's take a look at the bonds. one of the most probably boring assets ever. From here, when it crossed it, you could be sitting at about 300%. Even from here, 40% within 240 days, not bad at all. And of course, I cherry-picked the good stuff, because who doesn't really love a little confirmation bias? But there are cases with this EMA where you hit bull or bear traps and the market might go in a different direction or go sideways. This is where right size positioning and risk management come into play, or I should say should come into play. I'd like you to show some of these examples as well. So let's take a look at the Home Depot. Essentially from here and from here, it was just trading in a range of about 30% for about almost 700 days. Pretty boring. I mean, you can still earn a lot of money here, but it is pretty messy. It goes up. It's just a choppy sideways market exactly on this line. I wouldn't want to trade this. And the problem is you can't always identify when the market goes sideways or choppy. But that's exactly where if you step out from that trade once or twice, I wouldn't come back to that. I might miss on a huge opportunity, or if third time it goes up like crazy parabolic. But at least, I'm trying different other assets. You'll never win all the money in the market, but you can definitely manage your losses. Okay, let's take a look at the Ford. Ford is absolutely obliterated, as you can see, from, let's say August 21st. And it lost about 87% in value. And sometimes people think that meme coins can drop to 95%. I mean, right now it's not just the time of meme coins. Ford apparently is one of those. Let's take a look at the corn, which is a commodity. The same EMA works here perfectly. Pretty well. It was about almost 44% within 610 days. Roughly speaking, as well as electronic arts. This one is messy as hell. I would not want to trade it at all, because for the last almost 1,000 days it was trading sideways. Again, this does not mean that you cannot earn money on this, but this just doesn't look very exciting to me. There's one of the reasons why I like crypto in this case. You can get so much more money, and pretty much with the proper risk management you're not usually losing that much. As you might have already figured out, this strategy probably isn't going to do you much good if you're a day trader or scalper. There's completely different indicators and time frames for that case. In fact, it's probably going to be as useful as the screen door on a submarine. Even if you're somewhere in the mid-cycle, as we are in right now, it's much less beneficial as it is if you're in the bottom or the top cycle. You don't want to trade this as aggressively as in the bottom or the top. What you would want to do instead, if you're somewhere in the mid-cycle and using this strategy, is to probably just add to your winning positions and close your least performing assets, or coins in this case. That's exactly what I am doing right now. This strategy is so simple, it almost feels like cheating. You buy when it crosses up and you sell when it crosses down, right? Well, not so fast. As I mentioned before many times, I would like to reiterate this, and it especially shines when we are in the beginning of the cycle or where we are at the top. In the mid-cycle, this is where I'm going to test it. I'm going to try to place and open some positions once I feel like the sentiment is completely reset and see how it goes. If it doesn't work, I'll be the first to call it out, and I'm going to be transparent. You will see my trades, when I executed them, what percentage I would win or lose, and we will see if it works in the mid-cycle. And here is the beauty of it. The tool tirelessly scans the market, hunting for coins that just cross the almighty line, whether they are blasting off or nosediving into the oblivion. Every day it dishes out a fresh batch of potential winners and get out while you can signals. But what is most important thing is that even with the proper timing, which is the top cycle or the bottom cycle, even with the proper risk management and the size positioning, I don't go FOMOing into everything this tool delivers like a kid in the candy store. I still manually verify each pick, looking at the chart, looking at the previous history, just how it looks for the most part. Because let's be honest, not every flashing light means an action is required. I still strongly believe that consistency, risk management, understanding of the cycle, trade journaling, and especially learning from those who made it, which is, by the way, not me yet, is what gives you an edge as a trader. The tool, or indicator in this case, is just the strategy that I employ that assists me to utilize everything that I've just pretty much mentioned. And at the end of the video, I would like to introduce a rubric of giving myself and you a cheesy poster phrase that would hopefully provoke some deep thinking. Everything you ever wanted lives on the other side of the fear. I know you might have some questions. It was really difficult to put everything together in one video and explain almost 6 years of my experience in just one video without being repetitive. But if you do have any questions or concerns, please share a comment. If you do trade successfully already, share your strategy. What gives you an edge? I'm pretty sure everybody would want to learn that as well. For more content about my trading path, psychology of the market, hit that juicy like button, share this video with your friends, but most importantly, subscribe. See you in the next video.